G'day and welcome to the Morgans Edward Street Weekly Wrap. It's the 8th of March today and we're not getting any younger, so I'll pass you over to Tristan for his macro wrap.
Thanks Cameron. It's been another volatile week in world markets, with the Dow closing down 200 points overnight to 25,473. The selling was driven by news from European markets that the ECB has slashed growth forecasts and earmarked another round of stimulus. In Australia, the RBA left interest rates unchanged, which softened the Aussie dollar slightly. It's now buying 70.1 US cents. Oil's been range bound and is currently $66.20 per barrel, down from recent highs. A move above $70 would be applauded by the US shale producers, as this would improve their highly leveraged cash flow immeasurably. On our market, we have now concluded with reporting season and a raft of stocks are going ex-dividend. Please keep this in mind when looking at daily movements in the next couple of weeks. To hear more, let's hear from Cameron, who can give us his take on the market.
Thanks Tristan. Given the strong rally in the past 2 months, whereby our market has recovered 13% that it lost in the 3 months prior to Christmas, I've started buying BetaShares Australian Equities Strong Bear Hedge Fund. Ticker code is BBOS. This product gives investors a simple and accessible way to obtain magnified short exposure to the ASX 200. For instance, a 1% fall in the Australian share market on any given day can generally be expected to deliver a 2 to 2.75% increase in the value of the fund, and this is obviously vice versa. Given the recent strong performance of our market and the potential macroeconomic headwinds, including Brexit, our domestic elections upcoming, and the ongoing US and China trade war, I thought this was an opportune time to protect some of the downside risks that I believe our market is vulnerable to. The obvious risk to this product is that the market will continue to drive higher. In my view, the likely drivers of a higher market over the shorter term will hinder around talks of a further interest rate cut and weak domestic data that will support this view. In addition, an agreement between the US and China could also drive markets harder, but determining the level of which these events have already been priced into the current market is the million-dollar question and a risk I'm willing to take. I view this as a more assertive approach in trying to capitalise on market weakness relative to simply raising cash levels. We often forget that we can also make profits on market weakness, and this is one strategy that will attempt to do this. Thanks Tristan.
Well, that's a wrap for this week. Please remember that our comments in the video are general in nature, and speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. See you next week.